Welcome. I'm Catherine Magaña here with Rachel Ivanovich, Vince Stefano, and Greg Carroll, where we're here to provide you insights on the markets, investing, financial, and tax planning. Today is August 20th, and here we are. The markets over the last week are down a little bit from last week, but pretty much flat. And although it doesn't feel like that, it feels like we're down a lot more because it's been an interesting last few days. And here we are. The Treasury came in and announced that they're doubling the size of the buyback program. So that sent some of the bond yields lower yesterday. And then as of this morning, some of those have rebounded. So there's definitely been some fluctuations there. And so the Treasury buyback could exceed $4 billion, up from $2 billion. So once again, that was a pretty big move that we saw yesterday. And it was interesting that the markets are actually at least the stock markets were actually up with that news.
I think Besson actually said it could be well over $4 billion.
Correct.
As well. He was not sticking to that number, so
yeah. Well, we'll see.
We'll see what happens.
Yeah. And so we're, and then as of this morning, there's a little bit of a pullback with the markets. Looks like there's been some earnings reported, and there's also additional earnings coming out next week and some other news. So that's kind of been on the forefront. So here we are, the Dow Jones for year to date as of yesterday. So yesterday was August 19th. The Dow Jones was at 11.23% for the year, NASDAQ at 13.29%, the S&P 500 at 12.6%, and the Russell 2000 at 22.2%. So you would think we would be down a little bit more, considering how the markets have been treading the last few days, and even some of the volatility. But it's actually not down as much as you feel. So looking at the one-year rates, so the one-year CD really hasn't changed. So we're at 4.10, the one-year T-bill at 4.11, and then the 10-year Treasury right now is about 4.69%. So that's pretty much where we're at with those numbers. And then looking at kind of the probability of the September meeting, there is pretty much going to be no change. It's about a 67% chance of no change and a 32% chance of a height rate. And then looking at between now and the end of the year, for the December meeting, they're approaching 65 to 75% odds that there'll be at least one rate hike. So once again, anything can change.
Did they not mention the October one? Or
no, they just said in December for the year, between now and the end of the year.
Probably shouldn't move rates 2 weeks before an election.
That's probably a good thing. Yeah. That's probably a good thing.
Yeah.
One way or the other.
Just leave it go, yeah.
Exactly. So once again, here we are. We're still, the U.S. and the Iran are still at war, and Trump announced this morning that he has a crushing economic operation. And so not sure exactly what that means yet, but that's where we're at. And it seems like we've been going back and forth with comments and with the war for many, many months now.
Yeah, I think he's calling all parties out there. It's either you're with us or against us, and see what happens. But yeah, they're not winning it with the military side like they thought they would. It's kind of unexpected, I would say.
I'm not a military, person who understands, military operations that well. But I would think that, you have to be probably a little more aggressive in your military actions if you want to bring someone to their knees. You can't just, keep these, targeted type of things. I think you have to do much more. Anyway, but that's a topic of conversation for, barroom, not probably here. Anyway, interest rates. It was kind of interesting how you led off with interest rates.
Yeah.
A few days ago, I saw that the 30-year Treasury got to 5.31%. And we've been saying on this podcast that when the 30-year gets to 5.5, it really puts a headwind on stocks. And at the same time, I noticed that housing starts month to month, and in July, we're down 12.4%. And I saw that the U.S. debt climbed above $40 billion.
Trillion.
$1 trillion. Yeah, I forgot there's a T in there. Yeah. Now, a good portion of that debt is, uptick from the growth in the economy. But I think what the Fed did was, I don't know. I don't know if that was good or bad. I'm not a big fan of intervention like that. I think capital markets need to kind of address that situation. But the Fed really has only two ways to address interest rates. They can, and the mechanism is to buy or sell securities. So when they, buy, obviously, they put money into the economy. When they sell, they take it out. And more or less money in the economy is good if there's more. Borrowers have an easier time and interest rates go down. If there's less money, it's a lender's market and interest rates go up. And I think when the Fed started seeing, the stock market pulling back dramatically and the real estate market coming in, I think they did something to try to shore up those markets a bit. And, a lot of it, you got to look at the midterms. And, you hope the Fed's not political, but it is. And I think that you're going to see possibly more intervention. You had mentioned they may even double the size over the next, month or two. I don't know. But I will say that the Treasury wants to try to see if they can keep the 10-year at 4.75 as a ceiling. Now, what did you mention the Treasury was at, like 4.6?
4.69.
4.7? I mean, you're just a chip shot away now from 4.7. So again, I don't know whether this intervention is going to do much to help the overall
I don't know if you
markets.
saw, but it ends on November 3rd.
Yeah. Isn't that something? Yeah.
Interesting.
But I think what the bigger picture is that debt at $40 trillion. I think a lot of people are worried about that. I think the market's a little worried about that. And I think you're starting to see the bond market say, hey, maybe we're in for a little bit of a headache going forward. And you're starting to see it in the big technology names. They have sold off very dramatically over the past 5 to 7 trading days. They're continuing to, come under pressure today. A lot of that is because as the economy improves, we start seeing the economically sensitive stocks do better. And those are ones that are typically more value-oriented or growth at a reasonable price, and those are the dividend payers. And you can start seeing rotation out of the technology names into those names. But going forward, I think, depending on your risk tolerance, I'm going to say this again, we've got to start looking not only between now and the end of the year, but what's going to happen next year. And again, I think that some of the prices that you're seeing in some of these big technology names could be great buying opportunities. I've tried to nibble at some names as they've come in. I haven't been rewarded that dramatically yet, but I do think that some of this pricing is going to pay off in the long run. So again, the market is, always a little volatile this time of year, and we're only 70 plus days to the midterms. And one of the big things I'm seeing now is databases are a big midterm issue.
Oh, there's commercials that are all about the big data centers and how bad they are, and it's a big topic. If you're pro data center, your numbers aren't polling real well. If you're against data centers, people are gravitating that direction.
Which I can't understand, because data centers, in the initial build out of data centers, there's a huge amount of construction jobs that are needed.
Yeah.
And once you complete a data center, there's a number of other high-paying jobs that are going to be needed
there's
to maintain those
infrastructure being built out. There's
roads, so
sewers,
much that has to be done. That's what I don't understand. But hey, it's a good issue.
Sometimes the utilities costs
the utility
have gone
and
up.
water and utilities.
And sometimes
crop up.
it hasn't, but they just said it's all the time. So, it depends on the location and how it's being set up. But I don't think all data centers are the same. Some probably are milking the economy, the local economy, some too much. But
I think
it's
it
a
sounds
hot
like
button.
people want a say in I think the communities want to say, and do we want this? Or where can we put it? And I
Right.
feel like sometimes people feel like they don't have a voice. And
The leadership is just taking charge and letting them run, and not asking the community. So they should be involved.
And then it's interesting. I was looking at, we don't talk about it as much or hear much about it, but the Magnificent Seven stocks are basically flat since last November. So those were a lot of stocks that a lot of people owned, and obviously there's other positions too. But I just thought I'd share that with everybody, that it's things go up, things go down, and things stay flat sometimes too.
Yeah, the last one is due to report next week, right?
Yes, it is next Wednesday.
That'll be interesting, because
You know,
numbers will
and-
probably be pretty good, and how it reacts.
Well, there have been a lot of companies that have reported very good numbers in
Right.
the technology space, and the stocks have been just killed because the expectations are so high. But that's Wall Street. They overshoot on the top end, they overshoot on the bottom end.
Right.
So you kind of have to look at that and say, what's my risk tolerance, and how can I invest to my risk tolerance?
Right.
And there are some people that have much higher risk tolerance than others. I mean,
Yeah, I've had several clients actually interested in that company next week, and they're like, maybe it's a opportunity to get in. I'm like, why don't you just put an order in well below the market, where you're comfortable owning it, and then if you get it, you get it. If you don't, well, you got to reevaluate later. But in this volatile market, you don't want to be chasing stuff. Let it come down to you, right?
Well, as I've said, you got to let the market come to you sometimes.
Right.
And this is one of the periods when you really do.
I think there's a good opportunity for that.
And there's,
for sure.
It's good portfolio management.
Yep.
Okay, I need to ask you the fear
Yeah,
thing,
where are we at?
because there's been so much fear out there.
I'm really
Okay.
curious. Well, let's take a poll. Where do you think
Wait,
it's at?
what do you think it is?
46?
I'm going to say it's at 63.
I'm going to say 55.
You looked.
You looked.
I did. I was just in the middle of you two. Is it 55?
It is. Okay. So last week it was at 68 greed, and then this morning I looked first thing in the morning, and it was at 56 greed, and then before we came into this podcast, I looked and it was at 55 neutral. So
I was just picking the middle of you two. That's all I did.
So just so you know, the different rankings. So 0 to 24 is extreme fear. 25 to 44 is fear. 45 to 55 is neutral. 55 to 75 is greed, and 76 to 100 is extreme greed.
So we're
And
neutral to greed.
Yeah, but we've been we were in fear for a while through July. We pretty much moved, first part of August moved into greed, and then once again back into neutral, which I kind of understand now, especially with a little bit of market volatility we're seeing too.
I think a lot of, there has been a little bounce in some stuff that was beaten up here recently, kind of the rotation in the market. I mean, we're still within, 2% of all-time highs. So I can see, I think that makes sense, right?
But I think when you see, like we had 3 down days before, so when you see, I think, consistent days that are
It'll
down.
be a down week unless things change tomorrow.
True. All right, so let's talk taxes. So I actually had a client reach out, and clients are, getting money set aside to pay their estimated taxes for September. And I was like,
September
oh man,
15th.
it's coming.
couple weeks.
It's coming around the corner.
Yeah, so I want to talk a little bit about there was a new article that came out about Trump accounts that I thought was interesting. It is proposed guidance, so it isn't official yet. But this new guidance would allow employees to contribute up to $2,500 per year tax-free to the Trump accounts for their paychecks, and employers would actually be able to match up to $2,500 tax-free. So I thought that was a really great planning option if it actually comes to fruition, and we should know by October 15th of this year. Hopefully it'll be finalized by then. But I think that's planned because if you're looking at benefit packages or you have adult children with jobs, that's something for them to ask as they're negotiating their compensation. It might be a really great benefit to ask about. But then something that Catherine and I that came up a couple of times for this past week was talking about reserves, financial planning, and because it's great to build wealth, but I think it's also important to make sure that you have adequate reserves and liquidity. And so I was working with a client. I know we had a situation as well, but this client owns 5 rentals, and at the same time, they also own a business. And so the business had a decline, and 3 out of their 5 rentals became vacant. So think about that kind of perfect storm. And so it wasn't just one cash flow problem. It was several cash flows at the same time. And 2 of the rentals were out of state. And they were really dependent on the property manager to get them re-rented. And the process moved really, really slowly. And so they ultimately had to sell 2 of their properties at a loss.
Wow.
Yeah.
Ouch.
So that was a big ouch. And so if you do own multiple rentals, it's not enough to say, I have an emergency fund. You really need to think of layers of reserves for.
Got to be able to pay that mortgage when nobody's paying rent.
Yep, because you want to have, the personal emergency reserve, reserves for the business if that goes down, if you have a business, and then adequate reserves for the rental portfolio in addition to that. Because 5 rental properties doesn't necessarily, because people think, all that potential income is going to be coming in, but it also means 5 roofs. 5 HVAC systems, 5 opportunities for vacancy.
Washers,
and
ovens,
so potentially
microwaves.
5 things that could go wrong all at once. So I didn't want to be a killjoy about the rentals, but really, plan ahead for reserves. I think it's really, really key because we had something similar.
So then, as Rachel was alluding to, we had another client that we're working with right now that has multiple properties. She have some investable assets, IRAs and taxable money, but everything's pretty much fully invested, and there's a lot of gains, and so there's a lot of tax considerations along the way. So we were revisiting. There's a property that we're looking at, and the cash flow on that is very low, and so we were kind of reevaluating. There is, in addition to that, there was additional real estate bought with a loan. So we're just kind of revisiting, maybe paying some of that down. She's considering refinancing her loan and making sure she has some money set aside. So but once again, we designed and we're looking at different scenarios to see what's the impact and what's the best solution. And then there's the tax planning part of that too. So it's not, although we're not real estate agents, we do look at real estate from the planning perspective and can help.
And how it fits in with your overall financial plan.
Yeah, and so it's part of it. So definitely want to make sure that we're looking at everything. And then for that particular case, they have a lot of other real estate properties already, and they have more real estate than investable assets. So just, once again, it's if you have other investments we're not aware of, we're happy to run scenarios and look at that for you.
Yeah, buying rental real estate is not like buying stocks or bonds or mutual funds, and it can be a chore sometimes. You might have a good tenant in there for a few years, and I've had this experience where, I had 5 20-some-year-olds, never called, never a problem. I get a single mom and 2 young kids. Every 3-4 weeks, I'm getting a call. I'm like, how does everything break on you? The 20-something-year-olds didn't break a thing. And what are you guys doing? The oven, the microwave, the dishwasher, everything. I swear. I just got a text over the weekend, too. Hey, can you fix this? I'm like, wow. It's not always just easy.
But we do look at the full picture, and I think it's important that you have a comprehensive plan.
Exactly. Yes. And then another client we've been working with, so as within your businesses, potentially you may have a really good year, and obviously your business is successful, but then you have a year that's a year that's pretty substantial, and so we are revisiting retirement plans, looking at profit sharing plans, and then once again, before we implement, how does this tie in with the overall financial and retirement plan and strategy? So once again, we can look at retirement and profit sharings, but we obviously want to make sure what we're implementing and putting in place makes sense overall, and then obviously there's the tax planning part of that too. So once again, yes, investing, and we're very strong on the investment background, but the planning is just as important, and want to make sure that we're here to answer any questions and help you make decisions along the way.
I just had a client, spoke with her last week, early 70s, she's got an inherited IRA, taking RMDs. She's going to be in RMD age, in a couple of years for herself. She's like, I really want to see the projections. What kind of income is this going to be? So I ran a few projections for her on RMDs, and we'll sit down, and she's a visual person. She wants to see it. I think you're just going to have this amount of money. Yeah. She wants to see it. So, we can run a lot of projections for them, cash flow, RMDs.
Well, and that's so important, especially for inherited IRAs, because when you take the money out too, you have to pay taxes, and so you have to kind of plan that part of it too, to see, how much are you taking out of, and obviously you have certain time.
And is it going to impact Medicare premiums potentially?
Yep.
Irma?
All the
Yep.
extra.
She was
that
concerned
goes.
about Irma,
Yeah.
so. Yep.
All right. Well, I think that concludes today's podcast. We will be having a special guest with us next week. We'll have Robert Sharon with us. We'll continue the conversation and also include a little bit on life insurance and long-term care planning. And so thank you for joining us today, and we'll see you next week.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.